Hi, David Baker, CFO of Elemental Altus Royalties. We are a precious metal company, precious metal focused royalty company listed on the Venture and the OTCQX. Get through forward-looking statements. Maybe just a quick summary of what we are. So 10 producing royalties, and I think that really does differentiate ourselves from all of the other sub-billion-dollar royalty companies. Very much a focus on production and cash flow. Company started in 2017, acquiring producing royalty on Kwale. That's a mineral sands project in Kenya. We then acquired two royalties from Yamana in 2018. They actually didn't know they owned them. We had to send them the press release so we could buy them. And then just before listing in 2020, we acquired from the original prospectors a royalty on Wahgnion. That was Teranga, then acquired by Endeavour. Recently disposed to some private operators, but the mine's still going particularly well. We had a really transformational year in 2021. We acquired a portfolio of royalties from South32 for $55 million when we were a $50 million company. And really that came with the 1% royalty on Karlawinda. It's operated by Capricorn Metals in Australia, a real flagship operation there. After another company went hostile on us at the back end of 2021, 2022, we survived, but actually generally believed that consolidation in the royalty space was the right thing to do. So we merged with a UK company called Altus Strategies. And that brought a couple of key assets, the first being a very high-quality asset, a royalty asset on Caserones that's now acquired by Lundin Mining, and then a couple of development assets in West Africa that's going to be the real growth in our portfolio. So we've had a pretty busy year and a really strong record of growth since inception. As you say, started in 2017 with the royalty on Kwale. And then have grown every year. This year, results will be out on Monday, but yes, very confident that this will be the 6th year of consecutive revenue growth, and very confident that we can say that we'll have revenue above $17 million. That's going to grow again next year, and that's really from the two assets that are operated by Allied Gold, recently listed on the TSX here. That's Peter Moroney and the ex-Yamana team running that with a royalty on the main pit at Bonikro. And then where we've ended a satellite pit to them at Diba, which is just 10 kilometres south of Sadiola. So looking forward to even more revenue growth next year. And I think to be clear as well, this revenue is all received at zero cost. So this is after tax, this flows straight through to the bottom line. Particularly proud of our two cornerstone assets. This is more than 50% of our NAV and 50% of our revenue. First being Caserones, that came as part of the Altus side of the merger. So we've got just shy of a 0.5% NSR royalty on Caserones, now operated by Lundin Mining. Very, very long life. I think they're guiding towards 130,000 tonnes of copper equivalent. And that's paying us on a gross revenue basis between $5 and $6 million a year, depending on the copper price. Likewise, if you're Australian, you know about Karlawinda. This is Capricorn Metals. It's the Mark Clark and the ex-Regis team. It's a low-grade mine, so they're mining about 0.9 gram rock, but they're moving a lot of it, so 4.5 million tonnes a year. So that's got a 12-year life. Just recently upgraded to producing over 120,000 ounces of gold a year. So that's $4.5 million a year, depending on the gold price. Likewise, you see on the chart here, the bubbles. We've got some very strong assets in the pipeline. In 2023, we acquired a royalty on Arizona Sonoran's Cactus project in Arizona. We acquired that from RCF, the private equity fund. And they've recently just announced a joint venture with Rio Tinto to potentially double production there through new sulfide leaching technology. I think also particularly what we're proud of is the quality of our partners. We've got a royalty over the old Norton Goldfields Mount Pleasant mine that's operated by Zijin. I've talked to the quality as well of Lundin, Capricorn and Allied. And it's also important where our projects are. So we're very OECD focused, Australia, Chile, Canada and USA. And then the commodity mix is quite important to us as well. So we want to be gold focused. Split at the moment, it's about 70-30, and I think that's really where we want to keep it. I think sector consolidation's been really the theme in the junior royalty space. Since 2021, we had a hostile approach on us, and there's sort of been 8 different consolidation opportunities in the space that you've seen there. Gold Royalties acquired Ely, they acquired Abitibi, Golden Valley. Sandstorm, of course, acquired Nomad and Base Corp at the same time. Triple Flag acquired Mavericks. So we have seen real consolidation in the space. And we really think in terms of the peer group below $1 billion, we are a very, very attractive company and a real opportunity to grow this business. think the key of the royalty, key of the royalty business is really that we're free carried through exploration and capital expenditure through our royalties. So at Wahgnion, for example, this is the ex-Endeavour mine. Our royalty covers over 1,000 square kilometres in Burkina Faso. So that means every dollar they spend, every drill hole that goes in, every ounce they mine is covered by our royalty forever. Likewise in Mexico with Bear Creek, our royalty covers nearly 700 square kilometres. We also have a very large package at Caserones, and I think it's 9 out of the 10 targets that Lundin Mining are putting in this year are all covered by our royalty. And again, any discoveries, any mining there, that's all attributable to us at zero additional cost. And so I think this sort of speaks to the work that we've done to date and how we look at royalties going forward. Our royalty in Kwale has stopped paying us, but we did get to nearly 250% of our investment return. And these things only get better with time. So we buy things on multiples these days, but then we get gold price improvement or copper price improvement. We get exploration. We get increased production and throughput. So a track record on all our key royalties has had material investments, and that this chart only improves every time I put it together with more royalties coming in and longer life for all our assets. I think, again, what differentiates ourselves from any other junior royalty companies is our balance sheet and our shareholders. So we've since had some royalty revenue in since our Q3 numbers there, so we're close to $11 million in the bank. I've got another $20 million available on our credit facility, and that's with National and CIBC. Very low cost of capital there of SOFR plus 3%. Well covered on the street, but then also a very, very strong shareholder base. So La Mancha are material shareholders in us. That's the family office of Naguib Suarez, the Egyptian billionaire. And then a very strong institutional shareholder base. Also, we've found that some of the royalty vendors that we've worked with, such as RCF and South32, who we've both acquired royalties from, have remained very supportive shareholders. Management board still nearly retain 10% of the company. Fred Bell, sorry not to be here, but yeah, he's our founder and CEO. And then, yeah, very strong board, including John Robinson, the Discovery Group, a couple of La Mancha directors, and then a couple of directors from the Elemental and Altus side. Probably need to wrap this up reasonably quickly. We don't have a huge amount of time, but I think, yeah, just in short, in terms of sub-billion-dollar royalty space, we are the only group with material revenue, material EBITDA, material free cash flow, which means that we are able to redeploy that into new opportunities, especially in, as we all know, particularly constrained capital environments. 10 producing assets, but then also very concentrated on very high quality operators. And then we also do have that diversity. So we do have assets across 15 jurisdictions and a team that's really been doing nothing but buying royalties since 2017. And then I guess last but not least, we're very proud members of the Discovery Group. And so we're based in Vancouver, and so we share a number of synergies in terms of office space, marketing as well. So that's us.